Hello, in this video you're going to learn how to place your first trade on Binance Futures and start making money. Right, so let me just log into my Binance. This is your Binance app and this is how my Binance is looking. Now before you place any trade on Binance, you need to go to the futures account. Right, you click on futures right here. Right, futures, click on futures here. Right, when you click on it, now you see the balance here. I have 10 USDT there. That's the amount of money I have on my futures. But what if you don't have money on your futures wallet? How can you send the money to your futures account if you have money on spot? So let me just remove all the money, move the money from here. I'll transfer it. Let me transfer it back to spot. Right, so my money is my spot wallet right now. So if I want to place any trade on futures, I have to use this transfer icon, this transfer. I'll click on it, click on transfer, right, click USD. If you buy crypto, if you buy USDT on Binance P2P, it's coming straight to your funding wallet. So you have to transfer it from funding wallet, transfer, click transfer, confirm the transfer it to spot wallet. When you transfer it to spot wallet, before you transfer it to your futures wallet to be able to perform transaction on futures. So I will just click on this funding, remove it, change it to futures, right, then click on 10 USDT, then confirm the transfer. Now I've transferred my money to my futures wallet. So if I come here to futures, I have it here. I have it here now. It's $10. So how do I place my first trade on Binance Futures? Now let me explain some of these things before you place your trade. This is my trading pair right now. I'm on Ethereum USDT, right? Ethereum USDT. So if you want to change the crypto you want to trade, you can just click on Ethereum USDT and scroll. This is my favorite cryptos that I trade. You have all the markets that you can trade here. All of them. You can search for any market you want to trade. Like let me just say Doge. Yeah, Doge USDT. You can search for it. You can look for any crypto you want to trade, pairing it with the USDT. Right now, the next thing I want to explain is this: the isolated and then cross margin. What is isolated margin? The isolated margin goes hand in hand with this point. Right, isolated margin go hand in hand. Now because I have $10 here, if I click on isolated margin and then I click to this position, that means I'm using only $5 and I'm only risking $5 of my account. So I can only lose that $5 in any trade I enter because I'm isolating only $5. Right now, what if I change it to cross margin? What is going to happen? If I change it to cross margin, even if I am using 50% of my $10, right, all my account is at risk, right? All the money is at risk. All the $10, even if I use $5, $2 to enter the trade, all the money that is in my wallet is at risk. But if I isolate only $2, it's only $2 that is at risk. That's the only amount of money I can trade with. Right? That's the difference between cross margin and then isolated margin. Right, the next thing is this 10x, that's the leverage. Now this is the major difference between spot trading and leverage trading. That's futures trading. Like you have leverage, right? Leverage increase your profits or your losses. So if I put my leverage at 50, that's the highest risk if I'm trading Doge versus USDT. Now different pairs have different leverage. So if I go to Bitcoin has the highest leverage. I can leverage on Bitcoin with 125x, meaning I can multiply the amount of money I have by this number. Right, the $10 I have, I can multiply it by 125x and trade with it. Now it will magnify my profit or magnify my losses. So if I'm losing at 125x. If I'm winning at 125x. right? So if you're starting out in the crypto journey, just minimize your risks, put it below 10x, just to get, just to stay long in the market, right? So that's my advice to you. So that's leverage to you, right? So if you notice, my Binance might be different from your own now because I'm using two-way mode, right? If you want to put your own in two-way mode simply means that I can both short and long the same market. I can both short and long the same market. That means I can enter market in two ways. This BTC that I'm on now, I can short BTC and long BTC on the same app, right? So how do you do that? You come here, the three dots here, click on it, click preference, like see it here, hedge mode. If you click on it, you see one-way mode and the hedge mode. I'm putting it on hedge mode, right? If your own is not hedge mode, you can do well by putting it on hedge mode, right? So that's how to put your on hedge mode. So the next thing is open and close. Because I'm on hedge mode, I can open long and open short, right, at the same time. I can do that, right? So if I'm here, maybe I open two trades, long and short, I can come and close short or close long, just to differentiate, just to separate between the two. Then the next thing is my capital here. I can add more money. Now this 10 USDT that is showing here is showing you that I only have 10 USDT to trade in the market with. The next thing below it is market order. Yes, we have limits, we have post only, we have market order, we have stop limit, we have stop market, trailing stop, and then TWAP, right? Different market order that you can enter. Now most of the time I use market order and then the limit order. Now what is the market order? The market order is, if I click the market order, I'm going to enter at the current market price, and this is the current market price of BTC. So if I click market order and I execute it, that means I'm entering the market right away, right? But the limit order, I can place the time I want to enter the market. Now if I want to, for example, I want to long BTC below this price, this current market price. I want to long BTC below this market price. What I'm going to do is I'll just set it, maybe set it at $20,000, right? Then drag this to this position. Maybe let me just say I'm using 100%. Then I'll click long. I'll just long, and this is limit order. The order has been placed here, but I'm not yet in the market. I'm expecting that market is going to hit this position and then go up again from that position. That is why I decided to long it. That's the explanation of this. That's the explanation of limit order. I use 100%, put $20,000. That's where I want to enter the market and place the trade. So anytime, even if my phone is off and the market reaches $20,000, it's going to automatically enter the market for me. That's limit order. But market order, you're going to automatically enter the market, right? That is the difference, right? Now if I want to short the market, as you see, I'm using isolated margin, I'm using 20x short and all that, right? I can enter the market with market order and I can enter the market with limit order. Now this is where you can set your stop, take profit and stop loss here. Now if I mark it, you see I can enter my take profit and then stop loss before I enter the market. That's how to go about it. So let's check. Okay, what next? This is my candlestick, right? I have other videos that explain how the candlestick work. So candlesticks explains to you where the market is going to, predict to you markets, show you previous market behavior, and then use it to predict the future. That's what the market candlestick does for you. So let's say I want to short this market from this position and I want to use market order. All I'm going to do is I'll just come and click here, limit. I'll change it to market. If I change it to market, then I would use 100%. I'll use 100%. I'm using 100%. Then the next thing I want to do is I will just click on short because I want to short the market. So I'll just click short position and then short the market from there. Right, as you can see, I'm already in the market. Right, so because I'm shorting the market, if the market is going up, I'll start collecting or receiving. I'll be at loss. If the market start going up, I'll be at loss. If the market start going down, I'll be in profit. So the market is going down right now. Right, so this is my profit. My profit is counting. I'm making $0.09 right now. So I'll just leave it to continue. That's how to place the trade. If I want to close this trade at a loss or at a profit, I'll just click close position, and that's all. I'm out of the market. That is also, you see, it's above my price now. That is why it is in red. I enter the market at, this is the market price I enter. This is the market, this is the price I enter. And check this liquidation price, meaning that if price reach this level, I'm going to lose all my money. So if price reach $21,000, that's the price of BTC reach 21,537, I'm going to lose all my money. Like, I'm going to lose everything. That's how it is. That's the liquidation price. Now this is market price, right? This is market price, and this is the entry price, and this is the liquidation price. How much did I enter the market? How much did I enter the market with? $9.21. Right? What is the size of BTC? This is the size of BTC I entered the market with. Right? So it's showing you, and I entered the market with how many X? Isolated margin 20X. Right? That's the information about trading on futures, and then that is how to place your first trade on Binance Futures. Thank you.